So happy Tuesday, everybody. My name is Romy Jurado. I'm an attorney in the state of Florida. I have been practicing for over 14 years now. Real estate is something that we handle here at our firm, and we especially focus in foreigners. So today's class is about representing foreigners in buying real estate. And I want you guys to feel free to ask me any question as it relates to this topic or something, that's closely related. So one of the first things that I deal with when representing foreigners in the state of Florida as an attorney is the misconception that they need to buy everything cash. So, what I tell my realtor friends and the realtors that I work with is we really need to educate the foreign buyer that yes, they can buy it cash, but they don't have to. Here in the state of Florida, it's actually easier for a foreigner to obtain financing than it would be for a US person. So that's actually something interesting because with the money that they can buy just one property, they would be able to buy three properties and put them to rent and have it increase in value. Usually banks will finance foreigners with 30 or 40% down. They won't ask for tax returns or they won't check their credit because they don't have a social. They'll simply require that the foreigner create a US entity, which is something that we can do. Of course, that they personal guarantee it, and then that they provide documents by their accountants in their country showing what their financial status is. All of those things are pretty, straightforward to do. And so foreigners are able to obtain financing to buy property more, I would say, easier than a US person would. And I have seen that time and time again. So that's something interesting that we can share with our clients, that they don't have to buy cash. Even if they want to, they can actually, it might be better for them to not buy it cash and make money with the bank's money. And that's something available to them as a foreigner. The other thing that we usually deal with when helping foreigners buy property is FIRPTA. Not sure if you guys have heard of that before. FIRPTA, it's basically not a tax, but it's a withholding requirement when foreigners buy property in the state of Florida or anywhere in the United States, actually. We also deal with inheritance taxes. So whenever you and I, US people die, then we have a huge exemption from state taxes. Like I think it's 11 million, 50 million, something great. So we never really deal with that state tax, which is 40%. Foreigners don't have that exemption. They only have a $60,000 exemption. So everything after the $60,000 is going to be subject to state tax. Of course, there's ways to plan for it, but it's important that the foreigner understands so that they're not facing a situation where they pass away and other heirs have to pay 40% state tax from basically everything after the first $60,000. Another thing that we usually talk with foreigners about is a formation of entity for legal liability purposes. Even if they're buying cash, you still want them to form an entity so that if anything happens in that property, it's only limited to that property, and the tenants or whoever sues them for anything that happened in the property cannot go against their personal assets. Another thing we're going to touch is title insurance. Title insurance is actually a protection from the past, and I'll explain that in more detail. And it's something that I don't know any other country that has it. I don't know any other country that has title insurance besides the United States. If you know of any other country, please let me know. And it's a great insurance to have because basically you're acquiring this property free and clear. And if anybody makes a claim, that title insurance should be able to respond. And I'll explain what I mean by that too, because we also have issues with the different title insurance companies. And then now, with the new regulations in the state of Florida, there's certain restrictions for certain foreigners to acquire property. And we'll talk a little bit about that as well. So, FIRPTA. Non-US citizens are subject to this special withholding when they sell property in the state of Florida or in the United States. FIRPTA is an acronym for Foreign Investment in Real Property Act, a law governing the taxation and withholding by foreign persons selling US real estate. Before FIRPTA, foreigners could buy property, sell it, never pay any tax on the gains, and just be good and clear. And the United States didn't want that because they wanted to retain some of those taxes. So that is why FIRPTA was created. So usually the amount that's going to be withheld by the title company, it's going to range between 10 to 15% of the gross purchase price. So it's not 15% of the difference of what the person bought the property to what they're selling now. No, it's not that. It's 15% over the whole purchase price. Now, of course, there are some exemptions, right? So the first one is the purchase for personal residence exemption. So if a foreigner owns real estate and they sell it, and whoever buys it is buying it for $300,000 or less, and they plan to live in that property, then they can sign an affidavit so that there's no FIRPTA withholding. There's another exemption also if the property is less than $1 million, right? And the person that buys it is going to reside there, then the withholding amount is reduced to 10%. There is also another exemption where you have to show that the amount, basically there's not going to be any taxable income at that moment because the realization of the transaction is zero. This would apply when they do something called 1031 exchange. A 1031 exchange allows a person or a company to buy property, sell it, not pay taxes on the gain at that moment, and then keep on doing that as they keep on buying more properties. So it's not that the tax is gone, it's just that it's not paid at the moment of the sale because you're reinvesting that money in other real estate property. So if a foreigner were to do 1031 exchange correctly, then they won't have to withhold that 15% of FIRPTA because basically the realization of the transaction is zero. There is no taxes due because they did the 1031 exchange. So that's another way to basically avoid FIRPTA. So who qualifies as a foreign person under FIRPTA? We have to be really careful with that and assume that everybody is a foreigner. Just because they have a social, just because they have a visa, you cannot assume that they're not a foreigner. And the responsibility of the withholding, it's not on the seller. So it's not on the foreigner. It's actually on the buyer. And we have had situations where we are actually coming after the buyer, right? Because they didn't withhold the amount, they didn't take care of the situation. I guess they were not informed. And now the IRS is going to come after the buyer, not the seller, because the seller is a foreigner, long gone, is against the buyer. So it is the buyer's responsibility. So who is a foreign person? It's defined under FIRPTA, basically a non-resident alien individual, foreign corporation, partnership, trust, or foreign state. This is completely separate from immigration status, right? Green card holders, for example, are not automatically exempt. We still have to analyze. And we have to ask, what type of return did they file? So if they file what it's called a 1040 NR, non-resident, then you already know they're a foreigner. They're a non-resident. We do this analysis to see if the person or entity is a foreigner. Usually, right, if they create a U.S. entity, then that U.S. entity should not be a foreigner. And I said usually because if it's an LLC, a limited liability company, and it only has one owner, and that owner is a foreigner, then that LLC is considered a foreign entity, so FIRPTA would apply to the sale of that property. But if that same property was owned by that LLC, Florida LLC, and that LLC was owned by more than two people or two people or more, and even though all of them are foreigners, but because it's an LLC, it's not going to be considered a foreign entity and FIRPTA should not apply. Also, if the U.S. property is owned by a corporation, even if the corporation only has one owner, then that entity is not considered a foreigner and FIRPTA should not apply. So the main, I guess, rationale behind all of this is FIRPTA will not apply if the ultimate owner is required to file a tax return in the United States, such as is the case of an LLC with more than one owner or in a corporation. So FIRPTA would not apply at the title company level. When they do their own taxes, they're going to have to, deal with their withholdings or pay the tax or whatever it is. But at the title company level, the title company is not going to have to keep 15% and send it to the IRS. Assuming that FIRPTA does apply, then what is it that we can do, right? So one of the exemptions that I discussed before is if the sale price is $300,000 or less, and the person that buys it is going to reside there or their family member is going to reside there, it doesn't mean they need to make it their homestead. There is a misconception about this. It doesn't mean it has to be their homestead. It just has to be a property which they plan to reside for longer time than they're going to rent it out for the first 2 years, first two 12-month periods, actually, not 2 years, 12 months period. So if I were to buy a property from your client, I already have my homestead, but I plan to use it for vacation, right? And I plan to stay there 3 months every year for the next two 12-month periods. Then I can sign that affidavit saying that it's going to be a personal residence because I don't plan to rent it for more than 3 months. I plan to use it for 3 months and maybe I rent it for 2 months. That still qualifies for me to sign that and then for FIRPTA not to apply if the property is 300,000 or less, or if it's $1 million or less, and then we can lower the retention to 10%. So this affidavit of personal residence, it's something that a buyer can sign, even if they don't make that property their homestead, as long as they rent it less than what they use it for the first 12-month periods. After that, there is no restriction. So I want to clarify that, because sometimes people come to me telling me the title company retained this money and they shouldn't have, because they didn't understand that it's not, that they're going to make it their homestead, is that they're going to use it more than they're going to rent it. I don't know if you guys are seeing a lot of short terms sales, but we're going to have short sales, sorry. They're going to have to withhold if the owner is a foreigner. So even though, you can do a withholding certificate, and we can talk about that, but it's something to consider. So what is a withholding certificate? So the withholding certificate, according to the IRS, the withholding amount of the sale of U.S. property can be adjusted if the IRS issues a withholding certificate. A withholding certificate is an application for reduced withholding based on the gain of a sale instead of the selling price. So if 15% of the selling price is more than the tax you will owe on the sale, then a withholding certificate may be ideal for you. Important features to know about a withholding certificate is if the withholding certificate cannot be applied for and issued prior to closing, then typically the buyer gets to decide if the funds needs to be remitted to the IRS within 20 days or not, or if they can be kept in escrow. The IRS usually takes 90 days after the receipt of a complete application to issue this withholding certificate. The applicant must be able to prove their basis of the property. And, this is something that we usually do right before closing. So basically what a withholding certificate does is like a mini tax return, where you tell the IRS, you should not withhold 15% of the whole purchase price, because in reality, the client bought it for $300,000, they're selling it for $400,000, and the gain, it's only $100,000. And the taxable amount on that $100,000 should only be, I don't know, $20,000. So therefore, withholding 15%, it's incredibly too much compared to the taxable amount. And we submit this to the IRS in the form of a withholding certificate application. Then the IRS sends back a withholding certificate saying, okay, this is the amount that you have to send to us. Now, typically, the title companies are going to have to keep this money in escrow, but they have to agree to do it, because they have to keep the whole 15%, and they won't be able to release it until the IRS issues this withholding certificate. What I have encountered lately is that title companies typically don't want to do that, because sometimes, the IRS may take too long. They have to keep this money in escrow. Sometimes the withholding certificates may not be done correctly. Many issues can happen. But this is something that can be done in order to reduce the withholding amount if the taxable amount is actually a lot less than the withholding amount, right? So if that's the case, then a withholding certificate is something that should be done. So this is a little chart that we have. I, again, assume everybody is a foreigner, and then we start going from there to make sure that they are or they are not, or how they qualify. People here, for example, on student visas, they may have a social, they may have a work permit, but they're still foreigners. People here on E2 visas, they may have a social, but they're still foreigners if they're not here enough time. So you always have to presume they are and have the title company go through the whole exercise in order to determine whether they're a foreigner or not. I mentioned before about the 1031 exchange. So it's actually something that we do sometimes for foreigners, and it allows basically the foreigner to not have to send this withholding amount to the IRS. The problem with doing a 1031 exchange for foreigners is that the exchange has to be like at the same time. They have to buy the property and sell the property on the same day. Otherwise, they're going to have to come out of pocket for that 15% to send it to the IRS, so that the so that the title company can keep it on escrow, because when you do a 1031 exchange, all of the amount of the sale has to go to the purchase of the new property. So if they're not able to do a 1031 exchange on the same day, meaning sell the property, send the money to a qualified intermediary, and buy the property on the same day, then they're going to have to sell the property, send all of the money to the qualified intermediary, and then give the title company 15% to withhold until the withholding certificate is done, explaining to the IRS that no amount was realized, and then the title company can release that money back to the seller, the 15%. In 1031 exchanges, a qualified intermediary is basically, usually it's a company that does not represent the seller, but that receives all of the money from the sale of the property in order to keep it safe for the purchase of the new property. 1031 exchanges have certain guidelines as it relates to timing. For example, you have to identify the property that you're going to buy. You have to identify 3 properties, and the whole transaction has to be done within 180 days. Otherwise, you won't qualify for a 1031 exchange. We do use it for foreigners, but they have to understand they're going to have to come out of pocket with that 15%. So the title company keeps the FIRPTA amount in escrow, and the qualifier intermediary has the amount required in order for the purchase of the new property. Let's see. So that's 1031 exchange. And here I had mentioned about state tax. So foreigners who buy properties in the United States or who own LLCs, who have any type of assets in the United States, are subject to state tax. Usually it's 40%. It's 40%, the state tax rate. So they only have an exemption of 60,000. So anything after 60,000, it's subject to that 40% state tax. This comes as a surprise to a lot of people. We see it when we do probate, but it is something that you can plan beforehand. There's also certain treaties with certain countries that may reduce the state tax, but it's always good to plan for this. So one of the ways that we plan to avoid that state tax is, for example, we set up companies that own the property in the United States. But it's not enough to set up an LLC that owns the house in the United States, because what happens is when those people die, that membership interest in the LLC has to go through probate. And when it goes through probate and it's owned by a foreigner, then there's going to be 40% state tax on the value of that membership interest. And the value is going to be calculated based on the amount of the property. So just having a property owned by an LLC does not avoid state tax. It would have to be, usually sometimes what we do is there is a property owned by a Florida LLC, and then there is another company abroad that owns the interest on the LLC. And then that way, if the foreigner dies, nothing happens in the United States because the company abroad is still existing. So that's something that we may do. We also sometimes set up trusts for foreigners, understanding that they may still be subject to state tax if they take out the property out of the trust. And we explain that to them. Sometimes what we do is we recommend that they buy life insurance, and that way they have life insurance. And when the foreigner passes away, the proceeds of that life insurance is used to pay the state tax, So those are all things that foreigners can do as long as they understand that they might be subject to the state tax if they don't plan accordingly. Let me see. I don't see any questions so far, but if you guys have any questions, feel free to put it on the chat. Okay, wait, I see one question. Does it matter the type of LLC or corp? What if it's a foreign corp? If it's a foreign corp, I guess this relates to FIRPTA. It's going to be considered a foreign corporation, and it's going to be subject to FIRPTA withholding. So when I say corporation, I mean Florida corporation or U.S. corporation. That will not be subject to the FIRPTA withholding. An LLC would be subject to the FIRPTA withholding if it's a single member LLC. But if it's a multiple member LLC, then it won't, even if all the owners are foreigners. So title insurance, it's only available in the US as far as I know. If you guys know something different, please let me know. The advantages of title insurance is that it protects you as long as you or your heirs own the property. Protection against what? Against costs, attorney's fees, defense expenses, against any matter insured by the title policy. Protection against certain covered risks that do not exceed the amount of insurance, including a defect in title caused by forgery, fraud, levy on taxes on real property, appraisals due and payable but unpaid, the lack of right or access from the field, unpaid mortgages and other liens, easements or rights of way that limit the use of property, non-marketable title, and so on. So title insurance, it's great to have. It protects from the time that the alligators used to roam the land here in the state of Florida until now. This does not exist in other countries. The way I found this out was when I went back to Peru after a very long time, I would see properties that would have written in their walls, not for sale, with a phone number. And I found it really odd. I'm like, why is it that it says not for sale and they have a phone number? And then they explained to me, Romy, what happens is people trick you and they tell you that they own the property and they really don't, but they have access to it. And then you end up buying it, but they really didn't own the property. And I said, how is that possible? Don't they do a title check? Don't they do a title search? Where is this like a main database of all the recording changes in title? And I was informed that they didn't have such thing. They didn't have title insurance. There's really not a way to fully check. So it's kind of like a risk in other countries to buy property. Here in the state, in the United States, especially in Florida, there is no risk. You can, I mean, there's always risks. Let me say that. But at least there is something that you can search and be protected. Title insurance is not mandatory, but I recommend everybody to buy with title insurance. Now, one of the things that we see and that I have seen in practice is you need to know what the title insurance policy covers. It's so important because, for example, let's say that you have a client that's buying property cash, right? And actually, this happened to one of our clients. He was buying a house and he bought the house cash, but he didn't want to pay, I think it was $500 for the survey. You know, he was buying it cash. So he said, no, I don't want to pay that. Okay. He got title insurance. So he came to us because now he was selling the house and the buyers of the house didn't want to buy the house because the neighbor was encroaching into their property. The neighbor had built a fence, they had a boat, and it was already in the part of their property. So then the client comes to me and tells me, Romy, look, this is the issue that we're having. We're trying to sell the property, but my neighbor's boat and fence is on my property, and I didn't know this. And I said, oh, no problem. Give me your title insurance policy because this is an issue of title. I get the policy, and of course, this is standard language. Nothing will be covered that would have been found out through a survey. So I said, please give me a copy of the survey. Oh, no, we didn't do it. So because they didn't do the survey, they never found out the neighbor was encroaching into their property. And because of that, that is an exclusion from title insurance coverage. So no, they were not covered by title insurance. So now their only option was to negotiate with the neighbor, see what they can do, sue the neighbor, figure that out. But now they needed to do it from their own pocket because title insurance didn't cover that. Another issue that we've seen is people don't look at the title commitment before they purchase the property. The title company just doesn't send it to the buyer. So the buyer has no idea that there might be easements or there might be any situations like that. So in this other case, the buyer had bought the property. They never knew about the easement. Once they moved in, they saw their neighbor coming in and out with their truck from their property. And then they came to us and they were like, Romy, what can I do to stop them? I don't understand. They showed me this paperwork that they have the right to do this. I had no idea. The title company never disclosed. And now I'm in a situation where they're suing me to enforce the easement. At that moment, sadly, because that was an easement, a legally recorded easement, and everything was complied with, there was really nothing they could do. The seller didn't tell them about the easement, but this would have been shown in the title commitment and it was there. And it was an exclusion for the title policy and it was there. So it's really not a title issue because it was disclosed. The problem is the title company never informed the buyer. So that became a whole problem. Thank God it was settled. But it is so important when buying property, when helping people buy property, that you tell them to review the title policy, review especially a title commitment, because the title commitment is going to tell you we're going to insure this property against this, but we're going to exclude this, this, and this, right? In that case that I just mentioned, they ended up even suing the realtor because the realtor had received the title commitment, but they never gave it to the buyer. And that's an issue, right? So if you are getting the title commitment, give it to your buyer. If they don't understand what it says, have them speak to the title company attorney or have them hire their own lawyer. You want to make sure that you're not assuming liability just because, right? You're not, unless you are an attorney or a title insurance representative, you shouldn't be explaining what is covered or not covered in the policy or in the commitment, because then you are acquiring yourself as a realtor liability. So my advice is make sure that they get the title commitment so they can see what it covers and it doesn't, but have the title company or the attorney explain the issues to them. Of course, there has to be title research. There has to be a lien search to make sure there are no liens or anything affecting the property. So, and what we do sometimes when it comes to these title problems is we have to send a letter to the insurance company, the big companies like Old Republic, Chicago, whatever, whoever is insuring the policy. And sometimes they don't want to cover. And at the end, we may end up suing the title insurance company to make them cover the claim. So that's something that we may have to do because sometimes they don't want to cover right from the bat. But as long as they have title insurance and whatever happened would be covered, eventually they do cover and they defend, or they pay up to the amount of the title insurance amount, which is usually the purchase price. One quick way to lose title insurance is by doing quick claim deeds. So a lot of people are like, oh, I bought this property, but I already bought it, but I'm going to quick claim deed it to whoever. And they don't realize that by doing that, they're already losing the title insurance, because the title insurance is only going to apply to the person that bought it. right? Once you do a quitclaim deed, unless the buyer gets the policy reissued, you already lost the title insurance. And so it's important that when doing any type of title transfer, even if you're not doing it for a fee, right? You just want to gift it, that you get the title insurance policy reissued so that way whoever got the property, it's going to have that coverage. All right, so recently, well, not recently, now it's been a while, there is some restrictions or prohibitions against buying certain properties by people from China, Russia, Iran, North Korea, Cuba, Venezuela, and Syria. So this is a situation where we really have to sit down and see where is it that they're buying the property, how far it is from any type of critical infrastructure, or see if an exemption applies. It's an analysis that we have to do whenever we're dealing with people from China, Russia, Iran, North Korea, Cuba, Venezuela, and Syria, and they want to buy property, so it takes a little bit to do. It's not something that we can just say, oh, yes, buy it there, because it might be a full prohibition or it might not. If, for example, there are people from China, but they're here on a valid visa like L1 or something like that, then the prohibition may not apply to them, right? So we have to really analyze the situation and see how we can make it not apply. What are the consequences for violating this and buying the property? Well, they can lose the land forfeiture to the state. There can be civil action by the Department of Agriculture for forfeiture. They can record a lease pendants or notice of legal action. They can basically lose the property if they don't follow the restrictions. If both seller and buyer are foreigners, the buyer is not planning to rent but use as a holiday vacation home, the amount of the sale is $113,500. Is FIRPTA withholding required? The problem is the buyer is a foreigner. So the buyer cannot say they're going to use it for the personal residence. So the buyer would have to be a U.S. person in order to be able to use that exemption. Let's see, another question. Is there a time frame the title insurance and agent needs to send a title commitment to the buyer? It's going to be written in your contract when they have to send it by, but you have to be on top of the title company and say, please send it as soon as you have it, because you want them to analyze it and know what it's going to cover or what is not. But these are some of the things that we can help with and that we deal with. We handle both the real estate part, the probate part, the litigation part, and the immigration part. So all of it together. Well, I wanted to make this class short and sweet, to the point of the main things that I see with dealing with foreigners. Again, if you guys have any other questions, feel free to reach out to me by email, phone, any way you want, and Instagram. We're very active on that. Thank you so much for attending. I look forward to seeing you next time. Take care. Bye-bye.